Logistics firm Freightways has posted a strong first half result, growing revenue 8.5%, net profit solid, 52.5 million for the half year. That's up 17.2% on the year prior. And basic earnings per share up to 29.3 cents a share. Mark Troughear is Chief Executive, joins us now. Mark, good morning.
Yeah, good morning, Ryan.
Are you pleased with that?
Yeah, look, I think our teams have done a great job over the half year. Performance pretty much across all of the divisions of Freightways. So, look, I think particularly in the economic environment we're in here in New Zealand, really happy with that.
What is because we always talk about Freightways giving us a sort of an insight into the economy. What are you seeing? How are you feeling about it?
I think what you start to see in New Zealand is just a little bit of traction. So remember, for the last 3 years, customers have been trading down. For the first time in this last 6 months, we've seen customers trading up, only slightly, but there's a positive trend there, and we think that'll continue.
People sending, well, obviously not doing as much mail, but doing more parcels. Are you benefiting from that?
The e-commerce part of what we do is only about 20%. So the majority of what we do is business to business. We're shifting, could be auto parts from a distributor to a mechanic, so car can be fixed on the day and back on the road. So there's an awful lot of business to business freight we handle. The business to consumer part of it, so that's your online shopping, that's been pretty constant for us for the last 3 or 4 years.
And in terms of I saw a piece that you had been mentioned in, Mark, where you talked about the levy on mail versus courier or versus packages. Can you explain what that is, what your issue is with it?
Yeah, exactly. So what customs have decided to do is that there's a lot more volume coming over the border, and customs need to recover their costs for checking and screening that freight, which we 100% agree with. We have no issue with that. The issue we do have is that those items can come over the border through commercial operators, like ourselves, a FedEx, a DHL, etc., and customs will charge $2.21 an item. Or they can come through the mail and customs will charge them $1.28 per kilo. Now, the average item's probably half a kilo. So there's a big disparity in cost there. The irony of that is if it comes through us, we provide customs with digital data on who it came from, who it's going to, what it is, what the value is. If it comes as mail, customs don't get any of that data. And yet we are forced to pay in that instance up to 4 times as much. So that's our issue. Our issue is an equity issue rather than an issue with customs recovering their true costs.
Have you spoken to government about it? What have they told you?
Yeah, we've been talking to government for at least 9 months, backwards and forwards. I think they struggle to get their head around that. They seem to think that some of these Chinese e-commerce businesses in particular won't shift their volume into the mail stream. And we're not 100% sure, but it's a risk. And we have a reasonable amount of volume coming into our network from offshore, and we don't want to lose it, frankly.
Yeah, which is fair enough too. Speaking of offshore, last time we spoke, I think you had done that deal over in Victoria and Australia to purchase the logistics business. Got a mind to doing any more acquisitions?
Yeah, look, we'll keep looking. Really happy with VTFE, so welcomed them to the family 2 weeks ago. They joined Freightways. They're a Victorian-centric business, so we're pretty keen to keep looking around the other states in Australia so we can build out a national footprint. So we'll look in New South Wales and Queensland, WA, South Australia, etc. Yes, so very much got our eyes open for more opportunity.
Mark, you know New Zealand Post, how they are basically not picking up mail anymore. They're essentially a courier company. Does that annoy you?
Look, what annoyed, I don't mind having competition. That's great, but I think the shareholder of New Zealand Post, which would be you and me and a whole lot of other taxpayers, should get a return. And so that's my issue. And we see some of their pricing behaviour in the courier market. So our issue is, if you're a shareholder and you put a lot of money into a business, like has gone into their courier business, you should get a return from it. And getting a return is pretty simple. You make sure your revenue is higher than your cost, and you make sure your revenue is higher by making sure your price is right for what you're doing. So so that bit gets my goat a little bit right.
Mark, when you say pricing behaviour in the market, what do you mean?
Well, I've had plenty of examples where New Zealand Post reps have wanted into my customers, offering them rates that are a quantum cheaper without knowing, in fact, what the rates are that my business has. So that kind of behaviour from a government-owned courier company, yeah, that gets my goat.
Is that like, are they deliberately trying to undercut you, or are they just kind of clueless in that they should probably know what their competition's doing?
I'm not so sure they should know what the competition's doing, but they should know what the costs are, and then you price above your cost. That's how you make a margin. To us, that seems fairly straightforward.
Well, you would have thought so, Mark. Okay, let's say the government sells them, would you buy them?
Oh, look, I doubt we would be allowed to. I don't think the Commerce Commission would.
Comcom might not like it.
Yeah, would probably allow that. We're not advocating for them to be sold. We're simply saying, as a shareholder, be quite nice to get a return on your money. Be nice if they paid a bit of tax, paid a dividend. That'd be all right, wouldn't it?
Mark, always good to chat. Thanks for coming on the show this morning. Good to see you.
Good stuff. Cheers.
That's Mark Troughear, who's Freightways Chief Executive.